Okay, students, I'm just going to explain now one example here to make you understand how to create a income statement as well as a schedule of cost of goods manufactured and a schedule of a cost of goods sold. So the three things that we need to prepare, but we should have some information with us. So the three things I have prepared here, like I can show you like this right here. So on the basis of the journal entries that we have here, and this is the information on the basis of the information I have prepared these journal entries, right? So how I have prepared each and every point, I'm just going to explain in detail, and after then how that I have converted all these the journal entry to the ledger, and from the ledger we have received some of the information, like maybe the sum of the closing balances, and put it here in the code sheet. Okay, so I'm just going to start it from the very beginning, right? So here, the case is that one of the employee just joined, like Maninder Singh joined a job, and he needed to focus on tracing some of the activities for the month of April. Now, what he found that in the month of April there was some opening balance for the raw material, uh, that was a 7,000, and 30,000 that was in the work in progress opening balance, and then the finished goods that was the $10,000 on the 1st of April. So these were the three opening balances. Now, company purchased raw material 60,000 from the job sheet. They found like this is the one material they have purchased. This company have purchased. So $60,000. So once the company has purchased something, then definitely that is the expenditure of the company, right? So once that we know that purchase and other expenditures that we put on the debit side of that profit and loss account, right? And also we know, according to the golden rules of accounting, debit all expenses and losses and credit all income and gains if it is related to the nominal account. In this case we are considering this one as a nominal. So debit all expenses. So raw material that we have purchased, it means this is expenditure of the company, and $60,000 that we have put it here on the debit side, and it's a raw material, right? So raw material purchase to current means to account payable. Account payable is a current liability. So the second is like work in progress, manufacturing goods, and raw material. What is the meaning of this? So here, like 60,000 material that was purchased, right? No doubt that we were having raw material at the beginning 7,000, purchased during the year 60,000. Now next is, once the material were purchased in the bigger godown, that we put that material in the godown, right? Now in the production unit, the sum of the material were issued like $52,000 material that was issued to the production department for two jobs. Job A, that is 28,000, and job B is 22,000, and manufacturing overhead is $2,000. So in this case, 28 plus 22 for the both the job, we can say work in progress like $50,000. The raw material that was that is just divided into two parts, $52,000. 50,000 that was for both jobs, work in progress, right? And manufacturing overhead, that is the 2,000, and raw material that we credited. So first we debit when we purchase it, means raw material increases. Now we credit, raw material decreases, right? So raw material has gone down. That amount raw material of that particular amount means $52,000 has gone down, right? Okay, the third entry is $60,000, right? $60,000 means job A and job B, and manufacturing overhead like 15,000 here. So in this case, the first one is $60,000. Means what is that? That is I'm talking about the salary and wages payable. So work in progress is a $60,000, right? So this is the direct labors, you can say. So direct labor. And the manufacturing overhead is indirect labor. So we are talking about the labor here. Means salary and wages is always related to the labor. We pay salary and wages to our employees. So it means definitely there will be some direct labor, and in this case, as we have a direct material. So in direct labor we have 60,000, right? And manufacturing overhead is a $15,000. So this is indirect labor. Indirect labor means that may be supervisor or janitorial work or maintenance work. So that we have calculated here 15,000, totally 75,000. Now next we have here, next we have, see the manufacturing overhead. The next we have $40,000. Utilities, heat, water, power, 21,000, right? Rent of the factory equipment 16,000. Miscellaneous factory cost 3,000. So total of all these three is the 40,000. So look at this. All cost of operating the factory other than direct material and direct labor are known as manufacturing overhead. Always remember, manufacturing overheads always considered to be indirect expenditure. So these are the manufacturing overheads that comes under the manufacturing overhead. So manufacturing overhead we have here $40,000. So those expenditures that we cannot calculate, and those are not associated with the direct material and direct labor, non-traceable. Next is the manufacturing overheads. So the next is manufacturing overhead. These are all costs of operating the factory other than direct material and direct labors are known as manufacturing overhead. So some of the manufacturing overhead we have here 20,000, like tax, property tax payable, insurance payable. So we have this detail 13,000 plus 7,000. These are the expenditure which is incurred by the company. Now, next is the overhead expenditure, that is 80,000. 80,000 depreciation on the factory equipment during the month of April. So, if you talk about the depreciation, definitely the all cost of operating the factory other than direct material and direct labor are known as manufacturing overhead. So, so the manufacturing overhead is 18,000 and accumulated depreciation is 18,000 here. Work in progress. Now, application of manufacturing overhead to work in progress when job is completed. So in this case, uh, so work in progress from the like what we are going to do, we are going to apply all the manufacturing overhead to the work in progress. So when job is completed, we are going to apply those manufacturing overhead. It's a total 90,000 plus debit and credit. So if we talk about 90,000, so how it has come, that we will know shortly. Okay, now let's say if we have some figures with us. So we have job A and job B. In job A, $10,000, 10,000 hours, and job B is the 5,000 hours. So work in progress opening balance is 30,000. So work in progress opening balance 30,000 is already given. So just go back, work in progress 30,000, right, for the job A, and for the job B nothing is there. Direct material, we have a direct material of 28,000 for direct material here, and for direct labor is the 40,000. So direct material plus direct labor, it means for particular job A, we have opening balance of work in progress, then direct material plus direct labor and manufacturing overhead. So manufacturing overhead, how we have calculated at the rate of 6 from 6, like where, from where that we have calculated this 6. So 6 is the this is POHR, predetermined overhead rate. So estimated total manufacturing overhead is what? So estimated total manufacturing overhead is the $90,000, right? So this is applied. This is applied but not actual. Applied is always we apply the overhead on the basis of estimation that we as a company do at the beginning of the year. But at the end of the year, we see is there any difference from applied and actual? Then there will be over and under overheads. Okay, over applied or under applied, that we see. So this is applied. This is applied. So here we can see $90,000, that you can see $90,000 here. 15,000 is the total, right? So 15,000 is the total. 10,000 plus 5,000 at the rate of 6. So at the rate of 6 is equal to 90,000. So 90,000 is what? 90,000 is this month. Right? Manufacturing overhead applied 90,000. Okay. So now you can see that. Okay. So look at this. Now, somehow, like we have here total manufacturing overheads. So in this case, like we have found like 2000 that we have found here manufacturing overhead 2000. Okay. So now we are going to calculate only and only overheads. So what are the overheads? 2000 is overhead at the beginning, like we have 2000 this much. Then manufacturing overhead is a 15,000. Okay. So now we have calculated 15,000. Then we have here manufacturing overhead 40,000, then again 20,000. So all kind of manufacturing overhead we have added here. And 18,000 is that is the depreciation. This is also like total is 95,000. 95,000 is the total that we have here, manufacturing overhead. Applied is this much. It means we have this is the actual one. Applied less. So it means under applied. If apply is less, means under applied. So 5,000 is under applied. So 5,000 is under applied over here. Now, so we know that some of the goods are finished goods. So we found that 158,000 is the finished goods here. So 158,000 is the finished goods here, and total unit produced is $1,000. So 158 divided by 1,000 is 158 per unit, right? So this is the per unit cost that we have here. It's a per unit cost. Now here the finished goods from the work in progress department, it means from the factory that we want to reduce the stock, we will credit it. We want just to go for like finished goods has increased, then we will put it here as a 158,000 as a debit, and this is credit. So we are assuming that only this job is completed during the April. This is not completed, right? So this will definitely show in the work in progress under the assets section, because job is not completed, right? But this job is completed. We are assuming this one. Now here that we know that 750 units were sold. So 750 units, if that were sold at the rate of this much, it means we have received some money, or if not money, then account receivable. We will receive that money later on. Account receivable, account debit, right? So 225,000 is the figure given in the question. So $225,000 that account receivable debit, and to sale this much, like same with the same amount. So 750 units were sold at this amount. Now we know what is the cost of that. We know this is the cost of 150, number of units 750. So 750 into 150 is the 118,500. That is the cost of goods sold, right? To finished goods. From the finished goods has decreased, and this is the cost of goods sold already that we have sold. This is the expenditure over here. Now look at this from the starting, that raw material to accounts payable. You can see here the ledger T account. We have raw material, The opening stock that we have for the raw material, opening stock we have for the work in progress, and opening stock that we definitely have for the finished goods. And the rest all the entries, raw material to account payable. So raw material to account payable here 60,000. In account payable, you will see the 60,000 here, because debit side, debit balance should be on the debit side, credit balance should be on the credit side, with the corresponding to the this account. It means debit balance $60,000, debit balance $60,000 on the debit side. Here what I have written here, I have written here account payable. I have taken this figure under this account. Just for explanation, we need to write this one to account payable, to account payable. Okay, now if you look at this $60,000 credit side, so credit balance should be on the credit side of account payable. Go to account payable and put 60,000 on credit side. Go to account payable, put 60,000 on the credit side, and after that, we need to write this much, like this for raw material. We need to write the raw material here, this for explanation. So I have just written here for explanation. Exactly all the journal entries I have completed and put it here. Once I have done all these journal entries here step by step, then the next step will be the cost sheet. Prepare the cost sheet. Now look a little bit more further. Second entry is the work in progress of 50,000. Okay, go to work in progress account, write 50,000. Go to work in progress, write 50,000 on debit side. And so 50,000 is what? Work in progress 50,000, and we will write raw material. Then go to raw material, write 50,000, write 50,000. In narration, in explanation, write work in progress. So we'll go to raw material, here. Yeah, this is the raw material 50,000, and we write here by work in progress. So in this way that we have completed a ledger account for all the, on the basis of all the journal entries. Okay. Next is the cost sheet. If we talk about the cost sheet, we start from the direct material plus direct labor plus manufacturing overhead is equal to the total manufacturing cost of goods manufactured, means total manufacturing cost. Then if we add the work in progress and closing, then we will know cost of goods manufactured. So total manufacturing cost, mean direct labor, direct material, and overhead is equal to total manufacturing cost. So direct opening balance, we know that opening balance is given for the direct material. Opening balance we have $7,000, this much. Okay, next is purchase material. How much material that we have purchased? We know the $60,000 that we have purchased, 60,000. So total of these two, that's 67,000. Closing stock of raw material. So closing stock of raw material that we have calculated here, opening stock add purchase, right? Opening stock add purchase. Then we have here work in progress of 50,000. That means this material, this raw material that we shifted to the work in progress. It means raw material from the godown we shifted to the factory or production factory, right? So this is 52,000, and manufacturing overhead cost is this much, right? So once that we have shifted, right, and this will be the closing stock for the raw material in the warehouse, in the bigger godown. So this is the closing balance. So closing balance was required for here, right? So closing balance we reduced, and we see that $52,000, that is the raw material used. Raw material used. Now we want to calculate only and only, we want to write here only direct expenditure. So 2,000 is indirect expenditure, we know that, right? So we don't want here 2,000. So what I'm going to do, I'm just going to reduce it, less indirect raw material. So now we have $50,000. So this $50,000 is the direct material. We know that just for this is a simple thing. I'm just going to write uh, raw material means if we talk about direct material, direct labor, and overhead, right? Overhead. So three things are required. Let's say this is 100 and this is 200 and this is again 100, and total of these three will be 400, right? So this is only and only direct material, direct labor, and overhead, manufacturing overhead, right? So we will have total manufacturing cost. Total manufacturing cost we will find here. That we what we will do, we will add the opening work in progress, right, and less the closing work in progress, and we will find the cost of goods manufactured. So one thing that will be calculated. So same thing that we are doing here, right? Same thing that we are doing here. Okay, so now look at this. We have here $50,000. Direct material is $50,000. Direct labor is a 60,000. So direct labor, we can see that we have this work in progress, mean a direct labor. So direct labor is 60,000. We found that direct labor is 60,000. Okay. Now applied manufacturing overhead 90,000. So we calculated here applied manufacturing overhead 90,000. We have this much. Applied manufacturing overhead is 90,000, right? So 90,000 that we have calculated. 90,000 we have calculated. Next, total manufacturing cost is 2 lakh. Add work in progress 30,000 is the opening balance. Opening balance is already given in the question, 30,000. Next, we have we need to know like what is the closing work in progress. So closing work in progress that we have here, opening balance, add material, add salary, add manufacturing overhead, right? So total expenditure that will be 200,000 minus that we have finished goods here, and 72,000 is the closing balance for the work in progress. It means we have some material in the work in progress. It means the where the production is being held, where the production is going on, right? I'm talking about the production factory. In the factory there was some opening balance, like we spent some money for the opening balance. There was opening balance, this was the amount of for the opening balance. Raw material that we got it from the warehouse 50,000, right? Then salary and wages that we paid to the employees 60,000. 90,000 that was the manufacturing overhead that we have here, right? Total of this much. Now finished goods that we know 158,000. 158,000 is the finished goods that we know. These are the finished goods. So the finished goods that we have here, how we have calculated this much, like 158,000 is the finished goods that we have calculated here. The 158,000 is the finished goods. Okay, so now look at this. So finished goods that we calculated, and after that we have the closing balance of work in progress. Here the closing balance of work in progress is 72,000. It means direct labor, direct labor, direct material, direct labor, then applied manufacturing overheads, add work in progress minus closing work in progress. This is opening and this is the closing. The cost of goods manufactured at the time of manufacturing of the goods, right? So this is the total cost of goods manufactured. Goods manufactured, right? So once we found this one, then it will be very easy to find out the cost of goods sold. Now look at this. This is the schedule of cost of goods sold, COGS. Opening finished stock that we know $10,000. Opening finished stock we have. Okay, now add cost of goods manufactured 152, 58. cost of goods manufactured that we calculated from here. Then minus closing stock that we have. So closing stock, we can see here the finished goods, 10,000, that was the opening balance. Then in the finished goods, work in progress means like from the work in progress, we received this much of goods. After then, cost of goods sold was this much. Cost of goods sold, we calculated, right? And this was the closing balance. Okay, so now here we found that we have here less closing stock, and we have this unadjusted cost of goods sold. Why unadjusted? Because that 5,000 we have calculated here is 95,000 that was applied. Applied was 90,000, right? And 95,000 that was actual expenditure. So actual expenditure was more. So we applied under, right? Under applied. So under applied 5,000 is expenditure of the company will be added here, and adjusted cost of goods sold we have here. Now next point is we have sold some of the goods, right? So this is the sale, and cost of goods sold is this much, 123,000 here. Gross profit is this much, and from the gross profit we are going to deduct the manufacturing expenditure, non-manufacturing expenditure. Manufacturing expenditure that comes here at this part. Non-manufacturing expenditure are those expenditure which is related to the selling and distribution, advertisement, and all those, right? So operating expenditure, so $95,000. Now net profit before tax is 6,500. So this is what we have received here.